What is happening, crypto champions? Buckle up, because the market is moving faster than ever, and you need to know what's just dropped. We're diving headfirst into a whirlwind of critical updates that could redefine the game. From veteran investors making massive moves to analysts spotting uncanny patterns, and even major corporations shifting their entire treasury strategy, this is not the episode to miss. Get ready for the inside scoop that'll keep you ahead of the curve. We've got the data, we've got the insights, and we're breaking it all down for you right here, right now. Don't get left behind, stay locked in. First up, we're talking about the seasoned players in the Bitcoin arena and what their actions are telling us about the current market phase. Are we seeing the signs of a major shift? Then, we'll dissect a fascinating chart pattern that has analysts buzzing, drawing parallels to explosive past performances, and hinting at what might be around the corner. But wait, there's more. We're also tracking the price action as Bitcoin navigates key levels and uncovering which major players are making significant moves despite the volatility. And finally, get ready for a game changer as we reveal how corporate America is fundamentally transforming its financial strategies by embracing digital assets on an unprecedented scale, with billions flowing into new digital treasuries. This is the ultimate market debrief you've been waiting for. Hit that subscribe button, ring the notification bell, and let's get started. Veterans cash in. Is Bitcoin entering its late cycle? Get ready, because the long-term players in the Bitcoin market are making waves. Blockchain analytics firm Glassnode has just dropped some eye-opening data, revealing that veteran Bitcoin holders have already pocketed more profit in this current market cycle than in almost any other, with the exception of the 2016-17 period. This isn't just a small uptick. Glassnode's on-chain data shows a noticeable increase in coins being moved from older, established wallets directly to exchanges. This kind of movement is a classic indicator that seasoned investors, the ones who have been in the game for years, are starting to lock in their gains and take profits. This acceleration in realized profits is a significant signal, pointing towards growing sell-side pressure in the market. It suggests that we might be entering a more mature, or perhaps a late phase, of the current bull cycle. While it's true that over 99% of Bitcoin's entire trading history has been profitable for holders, these latest figures strongly indicate that those who accumulated Bitcoin during previous market lows are now strategically cashing out. This behavior from long-term holders, often referred to as whales or diamond-handed investors, can significantly influence market dynamics. Their decisions to sell can introduce a new level of supply into the market, which, combined with other factors, could signal a shift in momentum. For the everyday investor, this means it's crucial to pay attention to these veteran moves. Are they signaling a peak, or is there still room for growth? Understanding these on-chain metrics is key to navigating the volatile crypto landscape and making informed decisions about your own holdings. The data is clear. The old guard is realizing profits, and that's a narrative worth watching closely as we analyze the market's next moves. But is this profit-taking a sign of a market top, or just a natural part of the cycle? Stick around, because we're about to dive into some uncanny chart patterns that have analysts talking about a potential replay of past explosive moves. Chart similarities spark Bitcoin rally hopes. Could history be repeating itself in the Bitcoin market? An insightful analysis by CryptoQuant contributor Cass Ab suggests that the current price action for the leading cryptocurrency bears a striking resemblance to the patterns observed during the second quarter. Back then, Bitcoin surged to an all-time high of $112,000 before experiencing a correction down to $98,000. Ab points out that we're seeing similar lower lows and capitulation events, moments where widespread fear and doubt creep in, making many believe the rally is over. He even notes that Bitcoin has dipped below its trend line, a scenario that could potentially repeat itself. Despite the anxieties these patterns might evoke, Ab encourages investors to remain steadfast, advising, all you need to do is hold your positions. This sentiment is echoed by another prominent trader, Bitbull, who has identified signals indicating the approach of a local bottom in the crypto market. Bitbull highlighted that the Coinbase Bitcoin premium has turned positive during this period of perceived weakness, coinciding with massive liquidations of long positions. He interprets this as a sign that max pain is here and a short rally is expected. This suggests that the market has shaken out weaker hands, setting the stage for a potential recovery. Adding to this bullish outlook, a trader known as Mr. Crypto has drawn attention to a significant accumulation of liquidity positioned above the $115,000 price levels. This clustering of buy orders could indicate an impending short squeeze, where a rapid price increase forces short sellers to buy back their positions, further accelerating the upward momentum. As of the latest reports, Bitcoin is trading around $110,000, having seen a slight dip over the past week. Despite recent market jitters, the technical indicators and analyst sentiments suggest that the current phase might be setting up for a rebound, mirroring historical cycles of correction followed by renewed growth. The key takeaway is that while fear can be pervasive, understanding these cyclical patterns and identifying signs of capitulation and liquidity buildup can offer valuable insights into potential future price movements. But as analysts pore over charts, the reality on the ground shows Bitcoin dipping below a critical psychological level. We're breaking down why that's happening and what it means for the market. Bitcoin falls under $110K amid ETF outflows and market jitters. The cryptocurrency market faced renewed selling pressure as Bitcoin BTC slipped below the significant $110,000 mark, marking a 2.4% decline in the last 24 hours and extending a streak of losses to 4 consecutive days. This downturn highlights ongoing market volatility and investor caution. Ryan Lee, an analyst at BitGet Research, pointed to the weekend's flash crash as evidence of Bitcoin's thin liquidity, exacerbated by ETF outflows and declining on-chain activity, exposing vulnerabilities in market depth. Lee advises traders to closely monitor key metrics such as order book depth, futures open interest, and on-chain indicators like Bitcoin apparent demand to effectively assess liquidity risks. This cautious approach is crucial in understanding the underlying health of the market amidst price fluctuations. The broader crypto market also felt the impact, with Ethereum, ETH dropping 2.3% to $4,550 despite continued accumulation by treasury firms. SharpLink, for instance, announced its purchase of 56,533 ETH last week, boosting its holdings to 797,704 ETH and solidifying its position as the second-largest ETH treasury company. Other altcoins also experienced selling pressure. XRP fell 1.2% to $2.94, even with a new partnership with Gemini for a crypto card. BNB saw a 2.2% decrease to $851, and Solana Sol lost 3.4% to trade at $192. The total crypto market capitalization receded to approximately $3.89 trillion, a 1.4% decrease in the past 24 hours. CoinGlass data revealed that over $786 million in leveraged positions were liquidated during this period, with Bitcoin and Ethereum accounting for substantial portions of these liquidations. Interestingly, despite the overall market downturn, spot Ethereum funds saw a significant inflow of $444 million on Monday, August 25th, their largest single-day inflow since August 14th, according to SoSoValue. This influx increased the total assets in these products to $28.8 billion. Bitcoin funds also broke their recent losing streak, attracting $219 million after a period of outflows that had drained billions. These funds now hold approximately $143.6 billion in assets. This rebound in ETF inflows, particularly for Ethereum, comes as Fundstrat's Mark Newton predicts that ETH could bottom out by Wednesday, August 27th, and subsequently begin an upward trend, potentially reaching $5,100 and possibly surging towards $5,400. Meanwhile, analysts at Glassnode have noted that long-term Bitcoin holders have realized more profit this cycle than in all but one prior cycle, 2016-2017, indicating elevated sell-side pressure and suggesting the market may be entering a late cycle phase. Adding to the geopolitical uncertainty, U.S. markets are reacting to President Trump's attempt to dismiss Federal Reserve Governor Lisa Cook, raising concerns about the Fed's independence and the future direction of U.S. policy, which has led to a weaker dollar and mixed Treasury yields, with gold prices rising as investors seek safe haven assets. While market participants are navigating these price swings and analyzing institutional flows, a monumental shift is happening in corporate finance. We're talking about billions pouring into digital treasuries, and one company is leading the charge with a massive BNB acquisition. You won't want to miss this. Corporate America embraces digital assets. Bitcoin soars past $124K amid treasury boom. In a stunning display of evolving financial strategy, Bitcoin has shattered previous records, soaring past $124,000 as institutional demand for digital assets reaches unprecedented heights. This year alone, digital asset treasuries have collectively raised an astonishing $15 billion, a figure that eclipses traditional venture funding within the crypto space for the first time. This seismic shift signals a profound transformation as public companies now collectively hold a staggering 951,000 BTC, valued at over $100 billion. Furthermore, crypto treasury firms have emerged as the most liquid trading vehicles on U.S. exchanges, fundamentally altering the landscape of corporate finance. This evolution from speculative investment to strategic corporate treasury management is attracting a wide array of players, including Fortune 500 companies, mining giants, and leading technology firms. These entities recognize digital assets not just as investments, but as essential hedges against inflation and currency debasement, particularly in an era marked by unprecedented monetary expansion. Among the frontrunners in this corporate revolution are CEA Industries, Inc., NASDAQ, BNC, Circle Internet Group, Inc., NYSE, CRCL, Apexi, Inc., NASDAQ, UPXI, Bitfarms Limited, NASDAQ, BITF, TSX, BITF, and MARA Holdings, Inc., NASDAQ, MARA. Wall Street analysts are projecting that corporate Bitcoin allocations could surge to $330 billion over the next 5 years, a significant jump from the current $80 billion. This growth is expected to be driven by companies employing sophisticated capital market strategies, such as convertible debt, equity offerings, and specialized treasury vehicles. The regulatory environment has also seen a significant positive shift, particularly under President Trump's crypto-friendly administration. Treasury Secretary Bessent has declared America's digital asset frontier open again, and the landmark Genius Act is set to provide clear stablecoin frameworks, a move long awaited by institutional investors. CEA Industries, Inc., NASDAQ, BNC, exemplifies this trend with a calculated $500 million private placement specifically for building the world's largest corporate treasury of BNB tokens. The company rebranded its ticker to BNC, signifying its new identity as a gateway to the BNB ecosystem. BNB, as the native cryptocurrency of the BNB chain, powers millions of daily transactions and offers real-world utility, including staking rewards and discounted transaction fees. Its unique auto-burn mechanism creates built-in scarcity. CEA Industries has assembled a formidable crypto-focused management team, including David Namdar, co-founder of Galaxy Digital, and Russell Reed, former CIO of CalPERS. This team's seasoned financial expertise underpins the company's strategic approach. The company's August announcement of purchasing 200,000 BNB tokens, valued at approximately $160 million, marked it as the largest corporate holder of BNB globally. This move offers regulated, SEC-compliant access to BNB for U.S. investors. The $500 million raise attracted major investors like Pantra Capital and Blockchain.com, with Cantor Fitzgerald serving as lead financial advisor. Other companies are also making significant moves. Circle Internet Group, NYSE, CRCL, has seen its USDC stablecoin circulation grow to $65.2 billion, driven by a 90% year-over-year increase and a successful $1.2 billion IPO. Apexi, Inc., NASDAQ, UPXI, has expanded its treasury holdings to over 2 million SOL, valued at approximately $334 million, benefiting from staking yields and strategic purchases. Bitfarms Limited. Nasdaq, BITF, reported strong operational results, generating $78 million in revenue and mining 718 Bitcoin in Q2 2025, while also expanding into high-performance computing and AI development. MARA Holdings, Inc. Nasdaq, MARA produced 703 Bitcoin in July and increased its holdings to 50,639 BTC, making it the second-largest publicly traded Bitcoin holder globally. These developments underscore a paradigm shift in how corporations view and integrate digital assets into their core financial strategies. These corporate plays are massive, but what does this mean for the everyday investor? We'll wrap it all up with a quick recap and tell you how to stay on top of all the action. And that's a wrap for today's market breakdown. We saw veteran Bitcoin holders realizing significant profits, hinting at a potential late-cycle phase. Analysts are spotting chart patterns reminiscent of past bull runs, sparking hope for continued upward momentum. Meanwhile, Bitcoin dipped below $110,000 amidst ETF outflows and broader market jitters, but institutional interest remains strong with significant inflows into Ethereum ETFs. Finally, corporate America is making a monumental shift, pouring billions into digital treasuries and transforming how businesses operate. Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell so you never miss a video, smash that like button if you found this valuable, and let us know your thoughts in the comments below. You can also follow us on all our social media channels for even more real-time insights. Until next time, stay informed and stay invested.